Mswatu ingosi thula akayithathe akahambe nayo yadenza abadewone
It's 2 p.m. Good afternoon. This is Market View. Thank you for tuning in. My name is Lungilele Makakula. Today in Market View, economist Annalise Bia joins us for a conversation about the announcement government made explaining how it will cushion the deficit resulting from the fuel price increase amounting to 332 million emalangeni for March and April this year. These funds incurred by oil companies will be covered by the government from the Strategic Oil Reserve Fund and the Fuel Stabilization Fund to protect consumers. Senele will unpack this decision by government and how it will benefit consumers. Then later on our final segment, he comes back again to give us an update on today's market analysis. And on our lead story today, the IRS has closed the 2025-2026 financial year with a total revenue of 15.7 billion emalangeni, up 7.6% from the previous year. Let's get straight into our first story. In our first story, the IRS has closed the 2025-2026 financial year with a total revenue of 15.7 billion emalangeni, up 7.6% from the previous year. The IRS Commissioner General said this reflects disciplined tax and customs operations, strong taxpayer engagement, and the dedication of IRS staff to securing revenue for government priorities. Domestic revenue has grown from 4.79 billion emalangeni in 2012-2013 to 15.72 billion emalangeni in 2025-2026, more than tripling over time, providing a stable foundation as SACCO receipts remain volatile, dropping from 13.07 billion emalangeni in 2024-2025 to 10.40 billion emalangeni in 2025-2026. This shows Eswatini is funding more of its development through domestic revenue, reducing reliance on external sources. Over the same period, ERS paid 3.49 billion emalangeni in refunds, including 3.48 billion emalangeni in VAT and 6.37 billion emalangeni in income tax refunds, which protect taxpayer rights, support business cash flow, and reinforce confidence in a fair tax system. Customer confidence remains high as the IRS recorded a net promoter score of 83.96% for 2025-2026, up from 77.3% the previous year. The Commissioner General said this improves customer experience, supports voluntary compliance, and the IRS will expand ways for client feedback to improve service. Looking ahead, the Commissioner General Bartwell Nkambule says areas will deepen compliance programs, make compliance simple and convenient through improved service channels, and build stronger partnerships with clients and stakeholders to support voluntary compliance. The Commissioner General thanked compliance taxpayers and traders whose contributions keep the country working. He said they also recognize the commitment of VRS employees whose daily work underpins these results. Kambule says the service's focus is clear and it is to protect the tax base, improve fairness, raise service standards, and strengthen compliance so that the country can fund its priorities with certainty. The Eswatini Standards Authority, Eswasa, has entered into a memorandum of understanding with the South African Bureau of Standards to enhance cooperation in key areas such as testing, capacity building, and standards development. Eswasa Executive Director Ncamiso Mhlanga stated that the partnership will also help in reducing the cost for local businesses seeking standards certification.
It will enable us as SWASA to tap into their wealth of experience and ensure that whatsoever we do, we are able to collaborate. You will note the Honorable Minister yesterday did mention, and we also did mention that South Africa is Eswatini's biggest trading partner. And the key aspect of this trading has to talk to also issues of quality in terms of what are we trading, is it of good quality, and ensuring that it answers those elements pertaining to quality standards and ensuring that the goods that were moving between the two countries are of high quality.
Acting Chief Executive of South African Bureau of Standards unpacks the implementation plan.
From SEPS's side, we've got a team that forms part of the technical working group, all right, of about 4, 5, 6 people or so. And then from Eswatini's side, we've also got a team of about 4, 5, 6 people who would be forming part of the technical group. That team will meet before the end of April. They'll have their first meeting before the end of April. And what they will do is they will look at the areas of collaboration, the 6, 7 areas of collaboration that is outlined in the MOU. And they will deal with each area in detail around what is the need and what is the requirement around standards development, number one, okay? What's the request from Eswatini Standards Authority in relation to standards development? What are the problem areas that they would want the technical working group to address, okay? Then the second one would be in relation to conformity assessment, the issue of testing and certification that my CE has been speaking about. What are the issues that Eswatini Standards Authority, would want assistance with, in that regard. Then the third area is in relation to training and capacity building and job shadowing. How many people will be sent over from Eswatini Standards Authority to SABS to come and do job shadowing and to be placed there for experience, for exposure around standards development.
Eswatini Standard Authority's Executive Director Ncamiso Mhlanga says the MOU is a strategic game changer, with Eswasa having about 500 standards compared to South African Bureau of Standards 20,000. This partnership helps close a critical gap as it gives Eswatini faster access to already established standards. Reporting, Nelson Dlangamandla, Vuminkosi Nzinisa, Matsapa.
All right, and that's it for our business news. After the break, we connect with economist Sanan Sbia and we have a conversation on government's fuel cushion.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit. I declare a turnaround is coming my way. Turnaround is coming in my life.
Welcome back. Thank you for staying with us. This is Market View. The government has announced that it will cushion the deficit resulting from the fuel price increase amounting to 332 million for March and April this year. These funds incurred by oil companies will be covered by the government from the Strategic Oil Reserve Fund and the Fuel Stabilization Fund to protect consumers. This comes after a significant fuel price hike. Unleaded petrol has risen by 2.90 cents per litre from 19.45 to 22.35 cents per litre. Diesel has increased by 5.35 cents per litre from 19.85 cents to 25.20 cents per litre. And illuminating paraffin has risen by 5.30 cents per litre from 14.20 cents per litre to 19.50 cents per litre, effective tomorrow, 3rd April. How significant is this government cushion for consumers, and what will be the real impact of these price hikes? Economist Sanele joins us to analyze and answer these questions. A very good afternoon, Sanele. Thank you for joining us this afternoon on the program. So, will the 332 million really cushion consumers?
Good afternoon to you, Lumelele, and also good afternoon to the viewers. So in terms of whether the 332 million malangeni or 336 million malangeni will indeed cushion consumers, I think the answer is yes. Because we're already seeing the pump prices rising only by 2.50 cents on petrol, and 5.50 cents on diesel. Ideally, without that cushion, the number ought to be a bit much higher, and I think we're looking at something between 3 to 5 malangeni for petrol alone if we didn't have this cushion. So the long and short of it is yes, but I think what should also want to ask right now is what's next? Does it really give us a long-term cushion, or it's more or less a short-term cushion? And now that's where the real conversation should be. But right now we do know that it is giving us a cushion well through the month of April, God willing, and that is if we are not seeing any further escalation in the war within Iran and the US. That's where we are. But for the month of April, it is going to give us that cushion, and then going forward, we are asking ourselves whether it is going to be enough, or we're going to see more escalation, which is going to cause more disruptions into the Middle East, as we are seeing, Iran proxies, just making moves around the Red Sea, closing the Red Sea in some areas, just really looking at those moves. So that's what we are looking into right now, and just assessing how that is going to affect the economy. And yet another thing that we need to be mindful of, Lungelele, is the fact that we are not just dealing with one fuel price increase, but going forward into the periods of May, June, July, if this conflict continues to hold, then we would have to again dig into the kitty, or actually just allow market prices to dictate the price, at which point what we are worried about is how long can government continue funding this 339 million region. But that, just by the looks of how much we have in the kit, it should be enough to cover us for 4 to 5 months, as long as we have the fuel coming in and only dealing with the price.
So, yeah, we know that, Mr. Spear, that this hike will probably trigger secondary inflation and affecting the cost of goods. What other essential goods or services are likely to see price increases as a ripple effect of rising fuel?
Um, what we understand, what you need to understand, Lungelele, is oil, fuel basically is the engine which drives the global economy. So once we start seeing those prices increase, the price of fuel increase, then virtually you expect all goods and commodities to start trickling in some form of inflation going forward. So it's not just inflation that's going to be, the increases are not only just going to be contained at pump price level, but what we are also going to see is, it takes a truck to move your groceries from the wholesale to the retail outlet, and it also takes a truck to move those commodities from the farm or from the firm to the wholesale or that warehouse. So those costs will also now then filter into the price that you pay for all commodities. So we do expect going forward in the month of April and June to see a bit of a rebound in food inflation and transport inflation, because we also do expect to see, adjustments in terms of transport prices. If we get yet another increase going into April, depending on, or going into May, depending on how the war is actually going to progress going forward. So those are the things that we are looking forward to. We are looking at, and we do know that the inflation figures for the month of April, we do expect that to be in the lower 2% to the mid 2% because of what we've just mentioned. And another tricky thing that we need to understand about this war, Lungelele, is it does not only just affect fuel, it also affects agriculture. We have a lot, about 30% of global agriculture, of fertilizers come through from the Strait of Hormuz. And if that strait remains closed, then Africa is really going to start feeling the pinch more towards farming season, and that's further going to, affect inflation and prices thereon. And also in the short term, we should see that coming in and trickling in the economy as expectations start pricing in an increase in the overall price level of our commodities going forward.
Mrs. Bia, we have been witnessing consumers in Eswatini rather panicking, buying fuel in large amounts. How best can consumers prepare and also prepare and protect their budgets, against ongoing fuel price pressures?
I think mine is, we need to have faith and trust in the government. When the government says we do not have a supply problem yet, then that means there is no need to actually be panic buying, because this panic buying at this level, Lungelele, is resulting in a depletion of stocks that have already been delivered. And, that means you're going to see trucks coming in twice or three times a day just to fill those tanks so that consumers can get that stock and their fill of fuel. So what we need going forward, Lungele, is number one, do not overstock, because that is going to cause unnecessary disruptions to the markets. Number two, limit and minimize your trips as much as possible, because in as much as we may have a return to fuel in the tanks, but it makes it just become expensive right now. So it's going to eat into your budget even much further. So right now, for every liter of petrol that you are putting in, you are paying 2.50 extra. So you have to think of those issues when you make your trips. So minimize those trips that are unnecessary. Let us couple just so to minimize those costs of direct transportation. And going forward, Lungelele, we've had a very beautiful planting season. We still have rains to this point right now. So you'd expect that most of Eswatini are going to have those backyard gardens, and would have grown a bit of your maize, so that going forward you are going to be insulated from whatever rises that are going to be coming through from from the prices and the overall price level. So that's where we expect that we expect consumers. That's what we expect consumers to do. Yes, the situation may get worse, but our actions as we act out of our desperation and short-term heuristic memory, thinking that the problem is going to stay as it is, we are only worsening the problem. But right now, we need to sit down, listen to what the government is saying. Right now, the words we're going on is there is adequate fuel coming into the country, and that's what we also are supposed, because if you look at the supply dynamics, we should not be that much affected in terms of the supply and availability of fuel, but what we'll be feeling is mostly the price effect. And then also after doing that, let's start being vigilant about how we are spending our monies, because we are going into a period of elevated inflation, at least until after the war ends. And right now, a lot of our analysis is premised on the length of this war. If the war takes a bit longer, then we are going to have to deal with more inflationary pressure as well into June, July, or August. But right now, we saw President Trump coming out and saying he was going to end the war in 3 days. That's something he's said for quite a in 3 weeks, and that's something he's been saying ever since this war began.
Mr. Spear. So are there any long-term strategies that government can adopt to mitigate the impact of these increases?
In terms of long-term strategies, Lungelele, I think right now we do have some that we may pull out of the bag, in terms of, you may have to think around some restrictions so that there isn't much demand for fuel in the short to medium term. You could think around probably lowering the work week. You could think around, allowing flexible work arrangements, people that can work from home, let those work from home. And you could also think around, how you are going to extend this fuel subsidy. Those are things that you need to think about. But long term, what we need to be thinking around and thinking ahead to, Lungelele, is how do we deliver Puzumoya strategic fuel reserve well before time, well before 2028, so that whenever things like this happen, we do have at least a cushion or a buffer which we can tap into as a country. Because what we need to ask ourselves right now is, what were we going to do in a situation where supply is completely cut off? Now, that's what we need to be asking ourselves. Even if you have the money, it may not necessarily help you if supply is completely cut off, if you have nowhere to buy from. But if you have some fuel stocked up somewhere, that allows the economy to continue running even in those periods of such disruption. So long term, we need to ensure that we have the strategic for oil reserve, and we need to ensure that it's always at capacity. And we also need to ensure that we are moving more towards greener energies and, things that some fuel that we can produce domestically. We need to move towards those biomass fuel production, which we do have some capacity on. We need to then build on that capacity so that we diversify our energy mix so that we minimize our exposure to external shocks.
Right. Thank you, Mr. Spear, for your insight. He's not going anywhere after the break. He joins us again for today's market analysis. Stay with us.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare a turnaround is coming my way.
Turnaround is coming in my life.
akayithathe akahambe nayo.
All right, welcome back. Here, so tuned into Market View. We now get into our final segment, the market analysis with Sanele Swiya. Sanele, welcome once again. Let's quickly get into it. What is happening in the world of markets today?
Thank you, Lungelele. So what we are seeing in terms of the markets today is a bit of a reversal in terms of sentiments that we were seeing coming through from the markets. If you look at yesterday's numbers, you realize that the US showed some signs of optimism as we're awaiting President Trump to make that national briefing around what the war is going to be around the war. So when that happened, there was a bit of a return of some confidence into Wall Street with the Dow Jones Industrial Average 124 points, and the Nasdaq Composite Index was up 252 points, with the S&P 500 up 46.8 points. But when you look at the futures markets right now, it does show that markets were not necessarily satisfied with what President Trump said. Markets were looking for a definitive date to an end of the war, or definitive action that was going to be taken to ensure that the Strait of Hormuz is actually open for business, and you can get those big tankers flowing through that strait. But we didn't get any of that from what President Trump was actually talking about. But what we got was more of the same rhetoric, with President Trump really just stating that he is going to blow the Middle East or Iran back into the Stone Age. And that doesn't give the markets hope that we are going to see the Strait of Hormuz opening again. And then coming into Europe, now that's where we are seeing those sentiment reversals, not Lungelele. We're seeing the FTSE 100 losing some 23.5 points, the DAX losing 491.1 points, and the CAC 40 losing 92 points. So what we're seeing in that divergence, when you're looking at London performing relatively better than Frankfurt and Paris, that's largely driven by the fact that the FTSE 100 tracks a resource-laden type of, or is an index that has quite a number of those energy stocks, the likes of your BP, your Shell, they are listed in the FTSE 100. So such companies are expected to make quite some huge profits going forward. But overall sentiments are pulling the markets down in Europe. And then Germany there has a very high exposure in that manufacturing sector, and that's why we're seeing those losses around 491.1 points as those sentiments reverse, as the markets were waiting to see whether President Trump was going to give us actually more direction in terms of what is the direction of the war is going to be, when is it actually going to end, when are we actually going to see the Strait of Hormuz opening. And we didn't see any of that, and we didn't hear any of that coming through from what we saw yesterday. But we are continuing to see the bombardment of Tehran continuing in the Middle East. And then if you move on to the Asian markets, we're seeing again that pullback in the Nikkei, losing 127.76 points in yesterday's trade, and the Hang Seng losing 177 points, with a bit of resilience within mainland China, with the Shanghai Composite Index losing 29.27 points. Now, Japan remains relatively more exposed to the risk because of the storage and the reserve capacity. And again, those reversals in terms of sentiments is quite clearly explained by what we are seeing in Japan. But in mainland China, we do know that China has a lot of oil stored up. So that's why we're not seeing much of those moves towards that volatility. But it does show that overall the markets have come down to the 3,900 region above from above the 4,000 mark. So it does show that the war is weighing heavily on the Asian markets. And then coming into the Johannesburg Stock Exchange, again, when we were going into that presentation, President Trump's address, we were waiting for some positives. And the Johannesburg Stock Exchange did go up yesterday to reach the 115,000 mark, but then we've seen it come down. There's since come down to 113 level after following President Trump's, press briefing. And also we've seen the price of gold also rallying, and that helped the South African Stock Exchange. Domestically, the Eswatini Stock Exchange remains relatively stable on the same level. And in terms of the prices of the commodities, Brent crude oil, Lungelele, continues to be on the upward trend. We're now sitting on the $108.88 per barrel. That actually spiked immediately after President Trump's, press briefing, because it did tell the markets that we are not going to see any changes coming through. This war is far from over. And then when you go to the price of gold, it also spiked a bit because it just signaled this move to safe havens, but then also it is battling with the pressures on interest, which make very relatively lucrative. That is why we are seeing it at the 4,600 mark. And in terms of the exchange rate, the Lilangeni against the dollar is on a relatively strong footing, but continuing to suffer the lower and emerging economies curse, with money flowing to the developed north. Thank you, Lungelele.
Thank you, Mr. Sbia, for today's analysis of our markets. We've come to the end of our program. Thank you for tuning in. If you've just joined us, worry not. You can still watch this episode on our YouTube page, Eswatini TV. It was lovely having you. This was Market View Thursday edition. See you again next week, Monday, at exactly 2 p.m.